Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin. We'll be taking a look at some of the on-chain metrics such as inflows, outflows, wallet counts, taking a look at who's buying, who's selling, and whether any major developments are unfolding there. We'll also be taking a look at things like smart money concepts and 𝗕𝗢𝗠𝗠𝗘𝗥𝗦 theory along with supply and demand metrics on the charts, taking a look at the daily and weekly timeframes, taking a big macro view and just reviewing whether or not things have changed a lot since we last covered the macro picture for BTC. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be able to be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's waste no more time though. Let's jump right down into this video and start talking about what's going on here with BTC. Do we want to be going into those leveraged long positions, or do we actually just think the price has to come down a little bit further before we can actually think about a swing to the upside on the market? What we'll do is we'll come back to the charts in a moment, but before we take a look there, we want to take a look at the on-chain data, what's going on with the inflows, the outflows, and all that kind of good stuff. So let's go ahead and take a look at this. Let me pivot my head to the monitor up here. So we can see that from the 1st of January 2023 through to yesterday, which was the 24th of May, we've had 3.9075 million Bitcoin go onto the exchanges. We've seen 3.8734 million coming off the exchanges from the 1st of January through to yesterday. That means that 34,000 Bitcoin more on exchanges now than there was at the end of 2022. This is usually seen as a bearish thing. We see this bearishly because we've seen price action pushing upwards, right? But normally when that happens, you'd see an increase in demand. And when there's an increase in demand, Bitcoin tends to flow away from the exchanges. You buy on the exchanges, you move it away and you put it into some kind of self-storage, cold storage, that kind of thing. Not your keys, not your crypto, all that kind of stuff that you hear with these exchanges. Now, when crypto is on an exchange, it is vulnerable. It's vulnerable for many different things. The exchange maybe gets hacked, right? And you lose your crypto that way. Maybe that cryptocurrency exchange is not as solvent as you might think they are, and they go bankrupt and they use your assets to pay back their creditors, right? There's lots of things that have unfolded recently that have kind of really shaken the space when it comes to exchanges. So the best practice, and most people already know this, is not to keep your crypto on the exchanges, right? Instead, what you do is you kind of withdraw it, you put it into cold storage. Now, I am very pro Ledger. Even though there's a lot of FUD and a lot of noise at the moment that is illogical, does not make any sense whatsoever. There is no backdoor in the Ledger devices, and I still use my Ledger religiously. It is a cold storage device. It's a hardware wallet. That means it's disconnected to the internet and no one can get access to it. And when people do want to access the crypto inside your wallet, you obviously need to be able to authorize those transactions, right? You need to put in your code and you need to authorize it. You need to sign those transactions using the Ledger hardware wallet. Now, if it's disconnected from the internet, there is no way that those private keys can be leaked, right? And there's also no way that the private keys are going to get leaked without my authorization to do so either. Okay, and there's no backdoor in the Ledger device, right? And there's a lot of FUD, lots of noise of people who do not simply understand what it is that they hold. So I do urge people to do more research into the Ledger device if you are believing some of the stuff that you're hearing at the moment. And one of the worst things that can happen right now is that people are leaving the hardware wallet to go and put their money onto an exchange. So when we have, more on the way of exchanges right now, that can be compounded, and we might see a lot more going on to the exchanges, which makes your crypto more vulnerable, more open to risk, and we are risk adverse. That's ideally what we want to be. We don't want to increase our risks. We want to decrease our risks. We know that more Bitcoin has been going onto the exchanges. This is nothing new. It's been ongoing for quite some time, pretty much since the 1st of January. And you can see that here on the Bitcoin exchange balance line graph. You can see it's been on the up since the 1st of January, right? Lots of people leaving the exchanges during the FTX collapse and all that kind of stuff. Whether you call that a black swan or not, it's entirely up to you. Lots of people did see it coming. 𝗕𝗘𝗪𝗏 included. So we were able to short FTT and get off of the exchanges way before the collapse and all that kind of stuff, if you're familiar with what we were doing on Twitch back at the time. Anyway, nonetheless, we can see here that crypto's been flowing onto the exchanges since the 1st of January. Strangely enough, as soon as the market turned into some sort of bear market rally, bullish market, or however you want to kind of articulate it, we started to see more inflows going to the exchanges. People were selling, they were offloading their Bitcoin to unsuspecting retail investors. So we know that that's kind of what's been going on here, and we can see that there is more Bitcoin on the exchanges now. And now it's bearish because when you see a bullish environment, you tend to find that more Bitcoin is flowing away from the exchanges and people are storing it. When bearish times, it goes onto the exchanges being made available for purchase. People are going to looking to sell. That's why you put crypto onto an exchange, right? So knowing this, what else can we see? Well, we can see our line graphs for our inflows and our outflows, right? So the 1st of January 2023 through to yesterday, we can see 1.9 going on and 1.8 coming off, right? So we know more's going on. Now, when we take a look at the previous bear market, we can see that actually we had for the same time period. Let me just go ahead and adjust this for the same time period. So if I bring this up to the 24th of May, we can see the 1st of January 2018, no, 2000, sorry, the 1st of January 2019 through to the 24th of May 2019, it was 7.2299. Okay, going onto the exchanges, and 7.2621 coming off the exchanges. Slightly more going onto the exchange, coming off the exchanges, sorry, than is going on. It's a slightly more bullish environment, right? More Bitcoin is being soaked up. Lots of people are buying and withdrawing from the exchanges, and not as many people were putting Bitcoin onto the exchanges in 2019. Then we take a look at 2015. Again, I'll just adjust this for the correct time frame. So if we put this to the 24th of May, apply that filter, we can see that it was 4.9326 million going onto the exchanges and 4.8221 million coming off the exchanges. So in this particular case, slightly more Bitcoins going onto the exchanges since the 1st of January 2015 through to the 24th of May 2015. Okay, but one of the things that I want to kind of articulate here is, yes, this was the start of a bullish market, but it was much slower than it was in 2019. And also the prices were vastly different. It was kind of an unproven asset back then as well. People wouldn't really know or believe in it as much. And so therefore, we'd see less wallet counts and things like that back in 2015. Now, the big takeaway here really is we take a look at the amount of Bitcoin that is moving around. Okay, so from 2015 to 2019, there is an increase in the amount of Bitcoin that is being transacted upon. The price of Bitcoin during these time periods was dramatically increased. Okay, so you're talking a few $100s through to a few $1,000s. Right. So and there's an increase in volume. So the common thing that when I talk about this, that people kind of want to jump on is the fact that, well, Bitcoin is more expensive, so people buy less and therefore the volumes are lower. That doesn't really fly. What people are doing here, at least the vast wealthy people, they're accumulating wealth by accumulating more. They're buying low, selling high, and then buying more Bitcoin when the price comes down low again. Okay, so you're accruing and accumulating more Bitcoin, more BTC over a long period of time. So you see a growth in the volume, okay, with what is kind of being pushed around. This growth is also compounded by more Bitcoin being made available, as it's a proof of work, right? As you have halving events, it's harder to kind of make new Bitcoin. But at the same time, there's still new Bitcoin being minted and still being put into circulation, which means their volumes should always be on the kind of the up and up and up for at least for a little while, at least until you kind of reach plateau, which we're kind of getting to, but we're not there yet. My point here is that since 2015 through to 2019, we can see a very significant increase going from the 4.9 range to about a 7.2 million range. But then in 2023, we have a significant drop in volume, lower than that of 2015, significantly lower. So we can see that there's definitely an interesting kind of vibe going on here. Price actions pushed up, but volumes have decreased dramatically, right? We can see this with what is moving around. We're not talking about buying volume in terms of, we're seeing Bitcoin volume on the charts, for example, moving around. Purchasing volume. What we're talking about here is Bitcoin moving around the chain. Okay, it's moving to and from the exchanges, and the volume moving to and from the exchanges has decreased at quite an alarming rate for something that is being dubbed a bullish market. And I know I'm not bullish on the market, have never been bullish on the market since the start of this year. We knew a bear market rally was coming, and we kind of pushed up higher than expectations on that. And we can see a lot of reasons and rationale behind the recent movements to the upside when it comes to the BTC, right? But it doesn't make it a bull market. The volume and the inflows, the outflows doesn't make it a bull market either. Okay, instead, I think a lot of manipulation has been occurring with the price action being pushed to the upside to grab liquidity, a typical bear market rally, if you will. Now, when we come over and we take a look and outside of just the volumes, we can take a look at the wallets and we can see, okay, well, who's buying and who's selling? Also, another indication as to kind of whether or not we've got strength in a movement or not. Okay, so we have lots of different wallet counts. We start with this one. It's basically a wallet has to have over 0.01 Bitcoin to be counted here. And we can see there's a slight dip in this data. Okay, so we can see that they were accumulating all during these kind of recent high prices, right? So as price was around $30,000, you see all the significant surge to the upside here. And now you're starting to see a little bit of selling pressure. It's nothing major at the moment, but there's about 12 million wallets here, and there's a slight dip going from 12.07 to 12.06. So you can see there's a little bit of a shakeout just of these most vulnerable retail investors that have 0.01 Bitcoin. Now, as we go up into the more retail side, basically three different wallet counts. We have what I've called the 𝗕𝗘𝗪𝗔𝗥𝗘, which is a person who has over 0.1 Bitcoin. We've got shrimps, which is another person who had to have over 1 Bitcoin, and then dolphins, which would have over 10 Bitcoin. These are inclusive wallets. Okay, what I mean by this is that our dolphins with over 10 Bitcoin, the number of these wallets are also included in our 𝗕𝗘𝗪, because the keyword here is over. Okay, so I'm counting wallets that have over a specific amount of Bitcoin. This allows us to see whether or not we have major shakes in the market or whether we've only got really kind of like minor movements occurring. And so when we see dolphins going down, it is not an explanation to then see shrimps going up, okay? Because the shrimps already included these wallet counts, okay? So if we saw all three of these going down, then we've got a bigger problem, okay? At the moment, it looks like we've got the dolphins selling, okay, but the shrimps here, not too much, and the 𝗕𝗪𝗪, not so much. Although they are plateauing, a little bit confused, maybe denial, something to that effect at the moment. Okay, so we know that retail investors are still kind of supporting the market. They haven't fully shaken out the market. In fact, they haven't even started to shake out of the market. And it does look like they've still got quite the journey to go. This, of course, is only a 90-day view. Okay, so the last 90 days, that's what it looks like. So again, it's not really showing you a bigger macro picture. It just shows you the last 90 days. As we come up into the retail, into the more smart money funds, the institutional investors, we have sharks, which are our pro-level traders. This is a wallet count, shows us anyone who has over 100 Bitcoin. Okay, we have the whales, which is over 1,000 Bitcoin per wallet. And then we've got the Kraken, which is over 10,000 Bitcoin per wallet. I might change the name of this to humpback whale. I don't know, because these can get confusing at times. There are some wallets that I've now got access to which show over 100,000 Bitcoin. It's a work in progress, and it's a part of a recent development that we are making on the channel. There's going to be announcements on this soon. Probably going to take us another sort of 6 or so weeks to get across the line, but there's some pretty big things coming in terms of analyzing on-chain data that will not just be limited to Bitcoin either. So watch out. Okay, we have got data now. I'm just going through, cutting it all up, making sure that everything is accounted for and there's no anomalies with it. And we're going to start building out reporting systems that will be available to our members and so forth. So for more details, join us down in Discord. Some exciting times coming with that. But let's talk about what's going on here. Okay, we have sharks. Looks like they were accumulating recently, starting to come out again. Question here: why did they buy at this their high? Or at 30,000, and then prices have gone down, and now they're starting to sell off. This is because traders don't always get it right, and they know when to take the L. Okay, we'll take a look at a bigger macro view of those in a second, because they did a phenomenal trade in late December, rode this up, and they came right the way back out. They've started to try to do this again. They could be right about the move to the upside, They might be wrong about it, and I'll show you some examples in a moment. So whales over 1,000 Bitcoin, they've been increasing recently. It looks great on this 90-day view. I'll show you the macro on that in a second. And they've been recently coming out, right? So we can see price pull back a little bit, and we can also see that these wallet counts have started to also go down. We also have the Kraken over 10,000 Bitcoin. They've been coming out quite aggressively, not as aggressive as we have seen historically. We'll show you that in a moment. And you can kind of see here that they're now down at 117 wallets from a high up here of 121. Okay, so there's a significantly less people now with over 10,000 Bitcoin in their wallets than there was just over in April, for example, right? So not looking overly bullish on that kind of angle either. So for the most part, it looks like we've got institutional investors that were selling, and it looks like we've got retail investors that were buying, okay, at the moment. That's kind of how it looks to me. Some wallets, of course, may be accumulating on the high level that's invisible to this data, as in I can't see it within what I've currently got available to me here. It's not invisible because it is on the blockchain, but it's invisible to this data set that I have, okay? But it could be that people that have over 10,000 Bitcoin or have 1,000 Bitcoin are accumulating, okay, and then maybe buying a few little bits and pieces here and there. You can't really see it within the data that I've got here, but it's a possibility that we have to acknowledge as we see a lot of selling pressure here and not terribly too much in the way of buying. There's always a buyer, there's always a seller, so everything has to balance out, right? This is sum zero. You can't just sell your cryptocurrency to an exchange and think that they're taking all the hit on it, right? You're selling it to somebody else, and the exchange is just the middleman. So it's a sum zero game. Everything must balance, right? There's 19 million Bitcoin or whatever it is. This one. It's not going to load. 19 million Bitcoin, right? So 19 million Bitcoin out there, it's got to balance, right? 19 million has got to be balanced between buyers and sellers. So knowing these things, it helps us understand. So let's take a look, right? What happened or where we are in the kind of the 365-day view, right? So let's take a look at those sharks, right? Those sharks, they did that fantastic trade. They bought down here at the end of December or mid-December, November, sorry, mid-November here. So after those lows come in, they accumulate massively, right? Look at that size of the adoption or accumulation that was occurring by wallets that had over 100 Bitcoin, right? These traders knew exactly what to do here, right? They let price kind of move up and they grabbed liquidity by selling all that Bitcoin to retail investors who thought it was the start of a bullish market. And then bam, as soon as you hit 30K, they drop it right here and they bring us all the way back down. So they got out of their positions, right? They got in and they got out and then they started to accumulate again. The question is this a mistake? Okay, is this the mistake that they're making? They've made mistakes before. For example, they were buying over here, right? And they were buying this peak up here as well at, yeah, this is August, right? August 2022, just before the turn in the market. They were buying this and they were selling at a loss. They knew when to take the L, okay? And then they did that fantastic trade. This could be one of those situations where they get it wrong. Could also be where they get it right. Okay, it's hard to tell. Okay, so just note that they were buying and they have been buying here. Question is, what are they seeing inside the data that tells them that they should be going long on the market, right? That's kind of one of the things we have to take away from these guys, which are the 100 Bitcoin wallets, the traders in the space. Are whales not confident at all? We can see that they've been basically just selling out of their positions consistently for over 365 days. Okay, we can see it right in here. They've been selling all of this recent move to the downside. Okay, we had the June low. They were selling the June low. The August high, they were selling that. They sold the November lows. Okay, they were selling right up here when Bitcoin had pushed up into 2023, all the way in March and February. They were selling. Okay, they recently started to accumulate. And the question becomes, why? Is this a big shakeout? Are they going to start dumping this on the market, trying to drag the price of Bitcoin down again? They were selling November lows. Are they likely to be thinking that, you know, the market is not going down to new lower lows and therefore they have to buy? Or are they actually just trying to manipulate the market to bring it down to new lower lows so that it can accumulate? At the moment, one of the things that we know is the wallet counts that have over 1,000 Bitcoin per wallet minimum have not been accumulating. Okay, just take a look. In June, right, that June bottom, 19th of June, there were 2,198 whales. As of today, there are 2,030 wallets. Okay, we've dropped 150 wallets, 150-ish, 100 and actually it's a bit more than that, isn't it? 170 wallets approximately to the downside, right? There's so a lot less whales, right? This was all the way down here at 2,000. We almost lost 200 people that had 1,000 Bitcoin per wallet. So we know that they haven't really been accumulating. We're significantly lower in the wallet counts for our whales than we had seen in June lows, and much lower now than where we were in November lows. In November, there was 2,103, and obviously we're down here at 2,030. So we know that there's still a lot of accumulation to happen here from these guys. And the question becomes, do you think they're going to be paying more expensive prices than when they were selling? That's the question. Do you believe that the bottom is in? And if you do, then you believe that these whales categorically have no choice but to be buying higher prices. And we know how whales operate. Typically, they do not like to do that. They like to basically be on the right side of the trade, not the losing side of the trade. But what about the humpbacks? What about the Kraken? 10,000 Bitcoin per wallet. They've been buying up everything in the bear market, right? They've been accumulating a lot during the bear market. They've been paying prices in June lows. They were buying prices over here in August. They were buying up here as price really came down into those November lows. They were accumulating, right? You can see it right here. Fear was in the market. FTX collapsed. These guys were accumulating. And then after that, and as price starts to push up, they start coming out of their positions, which is interesting, right? They were buying low, and are they now selling high? Interesting to see how this is going to play out. In 2018, this is what happened. They accumulated during the bear market, and then they just flooded the market with excess Bitcoin to bring in the bear market low. Clear manipulation if you've ever seen it. The question becomes, are they going to do this again? I've got only this as evidence. They might do it again. They might not do it again. I'll leave that for you guys to decide whether you think they're going to repeat history here. But the patterns are very similar. They've accumulated during the bear market. Are they going to try to flood the market with excess Bitcoin and bring in those bear market lows? Now, if we take a look at a little bit of history, we can see that retail investors have a very similar pattern. Unfortunately, they accumulate during the bear market and then drop their bags right towards the end. And this is because of fear of whatever necessity. Essentially, they believe that maybe they're not in that bullish market that they believe that they were in, buying every dip known to man. This is very similar to what is happening now, by the way. The bottom was in February, the bottom was in April, the bottom was in June. And they basically see the wallet counts just increasing and increasing and increasing until they realize that maybe that's not what's going to happen, and they start selling. They start selling during this flat period here. You can see, well, why are people selling? And price action is just static. Well, that price action is static because that's where the whales are buying, right? Price action goes sideways as there's a buyer and a seller being matched up here, right? So price stays very static if it's highly liquid. And so you saw a lot of selling pressure and a lot of buying pressure, highly liquid market, very sideways trading market here. And you see the accumulation from the whales. Whales were not participating. Whales were selling, were not participating until this point in time. Okay, that's 2018. Where we are right now, if I find my retail investors, they've accumulated the Junes, they accumulated pretty much actually all of the January 2022. They accumulated April, they accumulated the June lows, they heavily accumulated the November lows, and they're buying up all of these pumps up here as well. At some point, we're going to find that highly liquid market where our sellers meet our buyers, and we're waiting for our whale investors to be able to jump into the market. And the only way they're going to be able to do that is if significant amounts of Bitcoin from our retailers become available for purchase. So at some point, I think that's going to unfold. What is the catalyst for it? I don't know. There could be so many different things, everything from Hong Kong to recessions to just, all sorts of various different things that could happen around the world that can spook the market. I think essentially it will come down to a bit of a housing crisis and people's necessity to sell. I think people's mortgages have gone up stupid amounts of inflation and all that kind of stuff. That's basically meant that their mortgage payments are now double or triple what they were previously, and it's not sustainable. We see credit card debt on the rise. We see savings accounts on the diminishing lows. It's only a matter of time until that explodes. And what are you going to sell? Your house, your kids, or your crypto? That's a joke, of course. No one's going to be selling their kids or their houses. Hopefully, they will sell the crypto. but let me know what your thoughts are in the comments below. Let's take a look at price action, right? So our on-chain data is pretty much consistent. It hasn't really changed over the months. We just see recent developments with what's going on. But price action wise, we do have some interesting developments. So if you follow the morning videos, you'll be aware of the microstructures here of what's potentially in play. So we have a potential scenario with a 5-wave drop here. Okay, now we have our fair value gaps. We can see these. We know that this is something that we're going to be looking to kind of, unfold over time. And these are at some key levels, right? So we know that our first fair value gap comes in just above this range of $25,000, which happens to be the 200 EMA as well. Okay, equilibrium falls within the gap down here between $22,000 and $24,000, and this is the one that triggers our impulsion. So we have a wave 1, wave 2. Wave 3 gets triggered here at equilibrium. Then we bounce up for wave 4 and would go down and fill this gap into that final 5th wave movement. Now, it's not all doom and gloom, because if we were to do this and we were to complete this structure, we would see a pretty healthy bounce to the upside. Okay, it would be pretty sizable. The bulls will feel very confident about the market, possibly pushing up towards $28,000 to $29,000. But it, in my opinion, would be just a short-term correction, because we would have to finish off what we started, which is a 5-wave drop here. Minimum expectations are going to be A, B, and C, and we do a big correction like this, taking us down below $20,000. Okay, that's kind of how that structure would play out. Now, it's also possible at this point in time on our daily time frame that does not play out. Okay, so there's a little bit of caution here. It's not yet confirmed until we hit 24,900 and something. So, if I bring up my hourly chart here, no, not on this one actually. Let me come over to this one on my hourly chart. Here it is, 23,937, right? That is the impulsion. So when we come down to that level, that's the area that we will be basically looking to essentially be kind of confirming that, yeah, we're in that bearish 5-wave count, and we're going to be looking to drop down lower than 20K. Now, until proven, it's possible that we're done here. Okay, it's possible that we go long at this point. I think there's low probability of that, but it's still technically possible on the daily chart that is what happens. I don't think it will happen, but it's a possibility that we should acknowledge, okay? And what happens on that breakout will be very interesting to Bitcoin's price. Are we going to be breaking above the 31K and so forth, right? So I think there's a low probability of it, but a probability is there nonetheless, okay? So the bulls do have some hopium, and they can push this if they needed to or wanted to. But at the moment, I'm seeing low volume based stuff going on here, and not really enough momentum behind those bullish movements. So I think it's going to be unlikely that plays out. I think the more probable is that we do go down and we do hit that $23,937 target, and then we confirm that we are in the bearish structure. So from our smart money concepts here, we can see and we can acknowledge there's going to be moves down to lower than 20K if we want to fill those fair value gaps. At the moment, we have a weak high, which says smart money concepts hasn't caught on to the idea that we are in this bearish structure, and we still have a bullish one here. That bullish one can stand, right? That doesn't have to change. Like I said, 20K or lower is fine, doesn't necessarily mean new lower low. Okay, so there's a few things to kind of consider here, and I talk about that a fair bit on this chart here. So this chart shows us with the idea of a Z wave, and the Z wave only really needs to go down between 12,500 and 19,700. It doesn't need a new lower low to complete the structure. Okay, but bearing in mind everything that I see on chain, that does make me very worried about the idea that actually a new lower low is highly probable if the whale investors haven't really been participating yet and were in fact selling in November. If they were selling in November and the wallet counts were on the decrease, then there's a highly probable logical kind of explanation to think that, yeah, we probably do have to go down lower. I would like 12.5 to hold if that is the case, because I don't want us to be in those super bearish situations where we talk 10K or lower, but they're all possible. Nothing here has broken the structures to the point where those new lower lows are not technically possible to happen. Okay, so we want to be really optimistic where we can, but we should be realistic at the same time, right? We know what's possible and what's not possible. A new correction to the downside here is healthy. Staying above 15,476 would be very, very good for Bitcoin, but it wouldn't necessarily be supporting the idea that the whales are entering into the space. It's possible that they do a lot of accumulation on this pull to the downside, and that could steer us in that direction. It could just be that they'll safeguarding themselves in November. They'll take that small hit and they'll move on with life. That's possible. It's unlikely because they don't normally like to take a loss, but we'll see how that one plays out over time for sure. Ultimately, our rejection area is still the supply range. This was the previous demand. So for people who are familiar with the channel, have been around for a while, you'll know that this is the area that we're calling out as the obvious area for rejection, 28,881 to 31,848. This, however, was not the obvious one to me because we were looking really only at pushing the 24 to 25K range. Once we broke above this, we had to kind of push up into that higher range, in my opinion. It's quite unfortunate because we didn't expect it to push this high. We were first looking at 20 to 21. Once we broke that, then we were talking about the 24 to 25, break that, then we're up here at the 28 to 31. So at the moment, this rejection is quite nice to see. We're just testing the 50 weekly EMA. Lose this, we come down to our range between 24 and 25, and more likely to test that EMA here on the weekly time frame at 24. I think wicking down just below it, hitting the 23,937 would basically find support from a weekly standpoint on our 200 EMA. Yet on our microstructures, we know that we would have hit a 1.618 impulsion, basically indicating that we're in a bearish structure. So I expect a bounce from our weekly 200 EMA. But other than that, I think it will be a short bounce before losing the 200 EMA as support and going down deeper. A relief rally after that would be expected, though, back to 28 to 29K. Before that tribe gets sprung and we go down lower than 20. Lots of volatility to be expected for BTC. Nothing here is immediate. I expect this to play out over quite a bit of time, probably weeks into months. But let me know what your thoughts are down in the comments below. If you found this useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Don't forget to join us down in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.